So today's topic is symbol options trading. Um, this is basically open to anyone who wants to trade in any stock market. Basically, I'm following only options trading now. So let's start and look into it. So I'm using an indicator called EMA. There are like more than 500 indicators available in all the platforms. This is a commonly used indicator in all the platforms. So it's called EMA, exponential moving average. There is something called a simple moving average or moving average, but this is better than that. Um, and this one is a little more uh, aggressively changing on than simple moving average. So it reacts faster and it reduces lag. Both are needed for scalping purpose. Uh, this is a simple one. Here we take the same indicator, but we will have three different parameters. So EMA, let's say like EMA X, 2X and 10X. So if you are new to the trading and all, like, you can always go with EMA 9 and EMA 20 and EMA 100. Okay. Or if you are like a little more experienced, you can just reduce the timelines. This 9 is nothing but 9 candles before or 9 minutes before that. So if you select this EMA 9 and you select the time interval as 1 minute, so it says it's taken into account the last 9 candles. So if you are faster person 3 6 30 also you can use it. So if the price, what happens is if the 9 can line EMA 9 crosses 20 when the price is above 100, that means it gives the stock to, it is telling the stock is going up. And if the EMA 9 crosses 20 below 100, it shows the price is going down. This is a successful trading strategy which has a 7 to 8 success trades every 10 trades. So what we are going to do is we don't get in with all the money. We just trade only 30% of the capital with this strategy, and then we'll exit that trade before even entering the next trade. So our capital needed is anywhere between $1,000 and $2,000, and we exit when we are above 3% or up to 10% above the price. And on an unexpected day, we get out of the call. We get out of the options or contract when we are 20% loss. Um, yeah. So this is an Apple chart on May 16, 2025. If you see here, you can see three lines, red, green and purple. So the red line is 100 EMA, green is 1x, and the purple is 20 EMA. Right. Green is 9x, 9 EMA, and the purple is 20 EMA, and then the red is 100 EMA. So if you look at the left side, um, if you look at the left side here, um, we enter the trade because the price and the crossing over, we enter it here are above the 100 EMA, and we book profit here or here or here, anywhere when we are like more than 3% profit, we just exit the trade. And we'll wait for an extra trade. And here if you see it, the price is below 100 EMA and the crossover happened before that, but we will wait till uh, all the three lines are below the 100 EMA. and we enter here, and we will exit somewhere when we are above 3 to 10 percentage. So basically this contracts, each contract will be like $40 for a weekly expiring ones, and we exit when we are like 42, 43, uh, 44, like that. And we buy like 10 or 50 or 20 trades. So when we are getting $3 per contract for 20 contracts, we will make like $60, and for a total of like $400 within like 5 minutes, or within like half an hour. So that's one exit and entry point. Then we wait, and then the price again happens here. We get in here. See, we have to look at this chart every time. We have to stay in front of the system. We cannot go out or anywhere. We have to stay here. You can play this on your computer, and then you do something else on next to it, sitting next to it. And here there is another entry. Exit is here. Again, you can wait for a good opportunity here too. Here also crossover happens, and then anywhere when you are making more than 3%, or more than that, we'll exit. We are not riding the trade for all the like entry here and exit here. No, we are not, or waiting for it to cross over here. No, once we are in a profit, uh, we sell and wait for the next opportunity. Okay, there is always an opportunity. Don't need to worry like this is only the last opportunity. No, Monday to Friday, there are 21 days in a month. There is an opportunity. This is a chart of like 2 hours. Here itself, like 1, 2, 3, 4 opportunities came. So money is out there. All you need is to have some patience, and wait for your opportunity. So stock averaging is like when the stock price moves against the contract which you are holding. So it's a little broader topic, and it may not be good for a beginner level, because it needs a little more precision exiting and entering into the trade. This is one sample trade I took this week, on 15th. This here, like if you look at it, I bought like 33 quantities of contracts at $41 a contract, and I was able to sell it for 48. So it's like a small gain, but for a large number of quantities. This is another trade where I took earlier this week, purely based on this concept, and here this profit is a little bigger. Like I got a $4 increase in the stock price, so I was able to make a $2 profit. Here this happened like the profit is very low because the stock was going against my favor, and this happened earlier this week too. Um, so here like 0.15, $15 a contract was the profit for an investment of 455. Sometimes you will get less than around 1%. So that is this 3% profit for 455. Yeah, this is another trade where I bought like 53 contracts at 32, and I was able to sell it at 32, and I was able to make this $2 profit for one trade. Um, But after selling, this stock went up again, it went up to like 0.45 a contract. But it doesn't matter. We just book the profit, keep moving, re-enter next time, and then keep this happening. Sometimes you will be closing it early. Sometimes you will be break even, like very less profit. Sometimes you will end up in loss too, but all you need is to keep going, keep doing it every day, every time, like 2 or 3 times, or based on the account value. Just keep it going. Someday, on an average, if you look at a monthly basis for a $2,000 account, you can get same $2,000 profit. Um, and when the account grows, you always, you know, so basically, when whatever profits you are making on a daily basis, you withdraw that money and keep it in your personal account and keep re using the initial capital.